Hi, welcome to the interview. Thank you so much for tuning in. Today is September 17th, 2019. So today we have with us Gabe Monroe. He's in the financial services industry, and he's a representative here with us today. Okay, I'm going to start off asking you a couple questions. Well, first, can you tell us a little bit about yourself?
Well, thank you first for having me here. Yeah, definitely. Once again, my name is Gabe Monroe. I am a registered representative with Primerica Financial Services. So that's kind of, a little bit about who I am. I've been in the industry now a little over a couple years. Okay. I have my full-time job is a golf professional, general manager at a local golf course here in the area. So I started out kind of part-time with Primerica. Mm-hmm. I love it. It's absolutely, I just love it. It's a great thing. So
awesome. So what kind of got you interested in this industry?
Well, wow. So I think just the need, right? The need is there for us to have those conversations that we don't typically have around the dinner table with finances and what we do and how we prepare for the future, how we prepare for retirement, and then everything in between, just life, emergencies, any of those things. We're not having those conversations anymore, so I like the educational piece for us to be able to go and sit down with families that generally don't talk about these things, or maybe they don't know. We can actually go and sit down with them and explain to them a little bit about, the different aspects of financial services and how we can help them out.
Okay, so can you tell us a little bit about life insurance? What is life insurance?
Okay, so that's a great question. Life insurance actually is just asset protection, or I guess income protection, if you will. A lot of times people look at it in different ways, but the main thing for life insurance is really just to be able to replace that income that's lost in case, God forbid, anything happens to, someone.
Okay, so I'm very young and I'm still trying to get to understand, the way of the world. So can you tell me a little bit about why I need life insurance?
Yes, absolutely. So one of the main things to understand is if you're, say, like yourself, maybe you're single, young, what would be your need for life insurance? If you're in college, if you maybe have small kids, anyone that depends upon you, right? So if you have student loans, things like that, in the case that you may, something might happen to you, lose your life, something like that. So now what happens is with the life insurance piece, that's going to be that need to kind of help fulfill all of the things that your family would normally be missing, anyone that depends upon you.
Okay, so around what age do people really start looking into life insurance?
Well, there's two things that life insurance is pretty much dependent upon. What affects it is your age and your health.
Okay.
So obviously, the younger you are, the less expensive it's going to be, and the healthier you are, the less expensive it's going to be. Okay. When we start waiting until we get, late 40s, 50s, it's going to be quite expensive. And then, God forbid, anything happens between that time and there. So one of our things is I'd rather have it 10 years too early than 1 minute too late.
So can you kind of tell us why it will be so expensive as we age?
Well, as you age, typically people are getting sicker, right? So we don't typically get healthier, you get sicker. So it's kind of a thing where the insurance company is actually taking on that risk. Okay, so they're taking on that risk, and they're, I guess it would be, I don't want to say hedge your bets, but they're kind of taking on that risk that maybe we don't have to pay out, but in your case, you're saying, okay, I don't want to die at all. So, so what that is, it's kind of, two people that kind of like doing this thing here. But what ends up happening is, if in an event that something did happen to you, then the insurance company would step right in and they would, obviously pay out that claim.
So about how long does it take to get life insurance?
Typically, there's a couple different things with our company. Generally, it can take anywhere from 15 to somewhere between 60 days to go through the whole underwriting process.
Okay.
We do have something we call Term Now, which can it's a rapid decision where you could actually get covered in as little as, I've seen it, in a day. Right. So it just depends.
Okay. So typically, what does it depend on?
It just depends. I mean, so there's a series of things that they check. They're obviously checking, you know, your prescription drug history. They're checking, you know, driver's records, those things, because they're taking on a risk. So they want to make sure that the higher a risk you are, then the more expensive it's going to be, right?
Okay. Well, thank you so much for that. We're going to go ahead and take a break. Thank you. How much do life insurance policies typically cost?
Well, it just depends. Like I said before, some of the things that kind of really depend upon is your age and your health. We've had cases where someone can actually get, you know, a young adult between the ages of like 20 and maybe 25 could possibly get, you know, $100,000 worth of coverage for, you know, around 20 bucks, somewhere around there. So I mean, you know, it's very, very inexpensive. Okay. There's, you know, without going into all the details and going through underwriting, it's kind of hard to kind of nail down as an actual cost, but that is definitely something that you know, I would love to sit down and talk to anyone about. You know, we can run a quote. So. Okay,
sounds good. So what type of life insurance is better? Is it guaranteed issue or simplified issue?
Okay, so that's kind of like you know, one of those questions where what's better. Our company, we only sell term, right? We only sell term insurance. We don't sell cash value or, you know, or any kind of whole life insurance.
Oh.
Our founder, Art Williams, was very big on buy term and invest the difference. A lot of times when families get cash value or whole life insurance, the amount of money that you have, you know, in your cash value, you could actually get a better rate of return if you put it into the market. So that's just kind of one of those things. I'm kind of biased there, but so I don't know. That question is going to be, you know where I'm going to say. So.
Okay. So when a person dies, can debt collectors collect their insurance payout?
Okay. So in short, no.
Okay.
Usually when a person dies, that money is left to a beneficiary.
Okay.
Okay. So the beneficiary is the one that is going to be responsible for taking care of that person's final wishes.
Okay. So does life insurance always pay out? Like, what are the conditions to getting your life insurance payout?
Well, you know, it just depends. There's a number of different exclusions in a lot of different policies without going through your policy, right? Without actually looking through your policy and finding out what the exclusions are. It's kind of tough to say where it won't pay from this or it won't pay from that. You know, our company, we normally settle all of our life insurance claims somewhere between 12 to 14 days.
Okay. Okay. So, who should consumers trust in regards to their life insurance?
So when you say who should they trust, what exactly what do you mean?
I guess I'm asking what companies, you know, what type of plans?
Well, there are a number of different companies out there. I think years ago there was probably over 2,000 companies. Now I think it's probably somewhere around 800.
Okay.
So, you know, some of the things that you have to look at when it comes to, you know, life insurance, mainly is, you know, the company's track record, right? You know, how long has the company been around? You know, typically what's the payout time? You know, so if I do have to make a death claim, you know, how long is that going to normally take to, you know, to do? What's the benefits of your policy? You know, so there are a lot of different things. Like I said, there's a lot of different exclusions and things like that, but then there are a lot of benefits that are also helpful for buying different types of policies. So, you know, to keep it general, it it's kind of tough to say who should you trust, because it just really depends, I mean, there are a lot of different things out there, so.
Okay, so people from my generation, we don't really know much about life insurance policies. So what are some ways that you can kind of help us understand a little bit more about that?
Okay, that's a great question. When it comes down to younger people, right, millennials, right, if you will, a lot of things that we look at as far as like the life insurance piece, if you're dealing with someone that is, maybe a recent college graduate, they have student loans, they have, small debts, those types of things, or anyone that depends upon their income, right? You definitely want to get some sort of coverage. People that typically have, debt, right? Like we said before, bill collectors can't come straight after your policy or, like that, because it's mainly for the beneficiary, but, a lot of people are going to do the right thing and they're going to take care of, their loved ones' things, right? So if you owned a house, right, obviously if your husband or whatnot was going to stay in that house, he's going to want to pay that house. He's not going to just say, oh, well, she's gone, so forget it.
Right.
Right. So those types of things, right? But so as far as to answer the question, as far as like millennials or young people getting life insurance policies, it's mainly just dependent upon who depends on you, right? Who depends on you.
Okay, so in the United States, we have this new president, President Trump. Well, he's not so new anymore. And there's been a lot of talk about our financial state. So I want to know your opinion about our financial state in the U.S. right now. Can you tell us a little bit about how you feel about it?
Well, the biggest thing that we're hearing a lot of times right now in the news, I think one of the biggest things is the trade wars or the tariffs, right? So one of the things I do as a registered representative, not only life insurance, but I actually am a registered representative for investments also. So the trade wars and the different things, we talk about strong dollar and weak dollar, okay? So that for those of you who've taken economics, strong dollar, it's not always good, right? Because when you have the strong dollar, that means you're producing, right? You're the superpower. You're producing things. You're doing a lot of things, but at the same time, you're going to have your cost is going to be more. So if you have a lot of other countries that need to buy things from you and they have a weak dollar, they're not going to be able to buy it. So then there goes the layoffs, there goes all the other different things. On the inverse side of that, if we have a weak dollar and say China has this strong dollar, and they can pretty much charge what they want to charge, and if we're consumers, we have to buy pretty much what it is. So I understand, and then again, I don't necessarily agree. So, just from both sides, it depends, it just really depends. I mean, from the financial side, I say, yeah, I get it, but then at the same time, because I'm not the top 1%, I kind of like, wait a minute, how come, X, Y, Z, the farmers are going through it. It's a lot of different things that are people that are being affected by these trade wars and these tariffs, so.
Okay, so for those of us who are not the top 400 richest people in the world,
right?
What are some advice that you would give for us to better manage our financial situations? Oh,
start early. That's probably number one. Start early. One of the things that we can do as far as in investments is to make sure you have to pay yourself first. I mean, a lot of times we go and we spend money on what we want to spend money on, and not in trillions and trillions of dollars that are in the bank. Most people, pretty much, that's their safety, right? I'm able to go to the bank and get my money. I can touch my money, those types of things.
Yes.
But the fact is, it's less than 1%, right? So less than 1% rate of return coming from the bank. That's not it. The Rule 72 says that's going to take you 72 years just to double your money. So that's probably not the best place to keep it. Maybe emergency funds, yes, but that's not where I'm going to invest my life savings in the bank.
Okay. Well, thank you so much.
Yeah.
All right, everyone. We're going to take a quick break. When we get back, we'll be discussing a little bit more about, financial advice and things that you can do to help better yourself. Thank you. Hi, welcome back to the interview. We're here again with Gabe, and we're going to continue our conversation about income and life insurance and things in that realm, okay? Right. So another question that I have for you.
Okay.
So a lot of times we hear the words wealth and income.
Okay.
And I know for sometimes minorities, we don't really get to see the difference in the two. Mm-hmm. So can you kind of explain to everyone what wealth is compared to income?
Okay, so one of the things that I look at, definitely, in my opinion, mm-hmm. right, wealth is more or less a mind state, okay. right? It's just kind of like a state of mind. As far as you having money mm-hmm. And those types of things, there are a lot of different vehicles that you can get. You know, if I'm understanding the question, we're talking mainly why some have and some have not, mm-hmm. right? Okay, so typically in your household, right, we think about the average conversations around the dinner table, mm-hmm. or whatnot. Mm-hmm. If we're talking more or less going to school, going to college, getting a good job, those types of things, mm-hmm. we're finding out more and more that that's not working for the average American family.
Absolutely.
Okay,
mm-hmm.
so we're living right now in a gig economy. Okay, so this gig economy that's produced DoorDash, mm-hmm. that's produced Uber Eats, Lyft, all these other different things. More and more Americans have side hustles. Mm-hmm. Okay, so when we start looking at wealth and that inequality where, okay, someone's gone to school for 5 or 6 years or 4 or 5 years and they still have to go out and do some different things. I won't necessarily say that it's on them, right? Mm-hmm. But I'll definitely say those conversations that needed to be had at the dinner table when they were younger probably were not had, right? They probably didn't talk about those.
Okay, so can you kind of tell us how minorities especially can accumulate wealth? Because I know from what I've learned and what I've seen, if your parent, let's say, had a house and a car and passed it down to you, mm-hmm. that would be some of your wealth. But if your parent did not have that, they grew up paycheck to paycheck, mm-hmm. they're not going to be able to pass down any wealth. So what advice can you give kind of to parents and future generations about accumulating that wealth?
Okay, so what we do in our company, we sit down, we do a comprehensive analysis, mm-hmm. right? It's confidential, it's complimentary, doesn't cost you a thing, right? You give us a call, we'll schedule an appointment, we'll come out and we'll sit down with you and we'll do what's called a financial needs analysis. Financial needs analysis is basically a GPS. Okay, so if you and I were going to get in a car and we're going to California, mm-hmm. right? Our mind says, well, just get in the car and head west. But in all actuality, that's not the way to get there, right? Mm-hmm. So we got to know the map. We got to look at it. Now there's no one uses maps anymore. Mm-hmm. So we'll maybe put in Waze or Google Maps or some of those different things. We'll type in the address that we're actually going to, and it's going to give us turn-by-turn directions. Okay, so in our company, what we do, we use that same process as like a financial roadmap. Okay, so we're going to give that educational piece, right? We're going to act as your financial coach, right? And we're going to actually write out this financial game plan that's going to allow you to navigate and go from point A to point B. Mm-hmm. Okay, so that's kind of one of the things that we do within this financial game plan that we do. When we're talking about wealth and how to accumulate that wealth, we have investment vehicles. If you were to go to your typical investment like storefront, right? I won't say names, but a lot of times they're not going to talk to you unless you have $50,000, $60,000, $100,000, $200,000 to invest. Mm-hmm. But on the other hand, our company, they're going to send a representative like myself, right, out to your house. So we're going to do a house call. Right, so we'll come out 6, 7, 8 o'clock at night, and we're going to sit down with your family at your kitchen table, and we're going to talk to you about how you can go from point A to point B, how you can start to accumulate that wealth. We talked earlier about starting early. Okay, we have a couple of different investment platforms where we can help a family start investing with as little as $25 on a monthly basis. Mm-hmm. So those types of things. It doesn't grow huge, right. Not in the beginning, but the longer the investment, right, the more it's going to grow.
Awesome. Well, thank you so much. And I want to thank Gabe again for coming and talking to us. Thank you. Hi, thanks everyone back for tuning in to the interview. We're here back with Gabe. So I want to ask you one last question.
Sure.
How much is enough to retire?
That's probably the number one question that I get a lot. The short answer is when you have enough saved.
Okay.
So what we kind of look at is in our company we use various information, stuff like that. We want to find out people's what we call a financial independence number. Mm-hmm. Okay, so let's just for an example, if we took someone, this is just strictly an example, if we took someone that say is like maybe $50,000 a year income. Okay, so they're bringing in $50,000 a year, and they're putting money away towards their 401k, right? Mm-hmm. If they were, let's say maybe 30 to 35 years old, right? Your financial independence number, if you want to still maintain that same lifestyle that you're living on a $50,000 income in retirement, your financial independent number is going to be somewhere between like 1.2 to like maybe 1.5 million, okay. Right? Okay. So for a lot of people, when they see that number, it's kind of, whoa, mm-hmm. It's one of those big, you're gasping because it's a lot. It's right. A lot, but like I said, in our financial game plan, what we do is we help families and individuals try to navigate to get to that, okay? Mm-hmm. So.
All right, thank you so much for all of your advice. Now, if you all are trying to get in contact or want to get in contact with Gabe, how can we find you?
Well, so our office is in Arlington Heights, and you can email me, gmonroe@primerica.com. Right? Or you can call the office number 847-627-5465.
All right. Well, thank you so much. It was so great having you on the show.
Absolutely.
I learned so much, and I'm sure viewers learned a whole lot as well. So thank you so much.
Not a problem.
All right, everyone. Thanks for tuning in. So if the viewers wanted to get in contact with you about advice and how they can set up their policy, what are some ways that they can contact you?
Well, our office is in Arlington Heights, so if you wanted to get in touch with me, definitely you can stop by the office, or you could actually email me, and because we do house calls, so we will come out, email me gmonroe@primerica.com, or you can call us at the office, and then our assistant will get in touch with me to kind of give you a call back. That number is 847-627-5465. So
right.
that's
kind
of how you get in touch with me.
Awesome. Thank you so much.
No, not a problem.